Welcome back to the cryptowrld channel, everyone. My name is Josh, and in this video, I'm going to be giving you a complete market update. I'll be covering everything from Bitcoin patterns, indicators, and important levels to watch. I will also take a look at some Bitcoin fundamentals alongside some important patterns, indicators, and levels to watch for Ethereum. And later in the video, I'll be covering what's happening in the stock markets right now and also what is happening in the US dollar currency index, which is very important for all investors. And just before we jump into it, if you appreciate these market updates, please feel free to leave a like down below. And if you're new to the channel, you might as well subscribe with notifications turned on for more updates just like this every single day. But with all of that out of the way, let's get straight into what this video is about. So right here, we're on the Bitcoin to US dollar chart on the 2-hour time frame, just to give you a quick follow-up from this bullish divergence that I first talked about around 3 days ago. And obviously, if you were watching my videos just 3 days ago, I mentioned right around here that we could see some reduced selling pressure in the immediate short term with perhaps some sideways price action or a slight move back to the upside. And that is pretty much exactly what we ended up seeing. And in fact, the outcome from that bullish divergence was almost the exact same as the outcome from this previous bullish divergence. But what's very interesting is if you extend this line even further down to the most recent low at the time of recording this video, this could possibly be seen as another bullish divergence forming if you're looking at these two lows right here. But I'll talk more about this possible bullish divergence in just a moment. First, just giving you a final update on that Bitcoin fractal that I've been covering for around 4 to 5 days now. And you can see here that this fractal pretty much ended up playing out perfectly, and the moment we completed the fractal, then the Bitcoin price started dumping. So for those of you that have been watching my videos for even the last 4 to 5 days, hopefully this helped you make some more money. But anyway, checking out the 12-hour Bitcoin chart, looking in the parabolic stop and reverse indicator, first of all, this is still sitting in the red. I've been telling you this is the case ever since this point right up here when we first flipped into the red. And it was also at that point right there around a week ago that these 12-hour price oscillators started to confirm a short-term downtrend, which is technically bearish. And as of right now, this is still the case. It hasn't actually changed over the past 1 week at all. But when I said I'll talk more about that possible bullish divergence right here on the 2-hour chart, it's because this possible bullish divergence is also visible on the 12-hour Bitcoin chart. You can see that we've clearly formed lower lows in the price, but looking in the 12-hour Bitcoin RSI, right now we are technically forming a higher low, but this is still yet to be confirmed. Ideally, I would like to see at least another one, if not two 12-hour candle closes before actually confirming this as a low in the RSI. But to be honest, I wouldn't flip overly bullish in the shorter term until we at least get this parabolic stop and reverse indicator on the 12-hour chart back into the green, and we need to see the price oscillators start forming a new uptrend. So that also goes for the MACD on the 12-hour time frame, which is technically still sitting in the red. And just to give you an easy example of all 3 of these indicators in bullish confluence, that was what we saw pretty much exactly 1 month ago. We saw green in the parabolic stop and reverse indicator, and we also saw an uptrend start forming in both the RSI and the MACD. So until we see some more bullish confluence like that on the chart, then technically I am still leaning more bearish in the shorter term trend, as I have been saying for around a week now. Now taking a look at some important levels for Bitcoin on the daily time frame. Our first important level has already been broken through, and that was that $37,000 level. So now, technically speaking, 37,000 should be acting as at least some short-term resistance if we do bounce back up to those levels. And anything above 37,000, I'll be looking towards around 39 to 40,000 as strong resistance for Bitcoin. But other than that, looking at some important support levels, we've still got this level of support at around 35,000, which has just recently been supporting the Bitcoin price. But if we confirm a break below 35,000, then our next significant level of support is at around 33,000 due to this previous low. And that is an important level to hold above, because if Bitcoin is remaining above 33,000, technically speaking, we are still in a higher low. So obviously we only form a lower low on the chart if we break below 33,000. And in that case, a confirmed break below 33K could possibly send the Bitcoin price down towards the $30,000 level. And this level just here, by the way, I've got at 29,000, since that is closer to what we saw back in June and July, and also back in January last year. And looking in the VPVR indicator on the daily time frame, this also backs up a lot of that information about those important levels of support. But rather than telling us specific levels of support, this is telling us a massive range of support, which started at around 39,000, and this is going down towards around 30,000. So pretty much in the entire $30,000 price range is a lot of support for the Bitcoin price. So it is very important that we remain above those June and July lows, because if not, in this VPVR indicator, the volume really starts dropping off. So technically the support really starts dropping off if we fall below around 29,000 approximately. But what is very interesting right now is the daily RSI, which is actually holding holding up very well, which means if the Bitcoin price comes back down and even if we break below 33,000 and form a slightly lower low, in a potential scenario like that, there is a decent chance that we could form another bullish divergence considering how well the RSI is holding up. A somewhat similar example of this sort of price action and this sort of RSI was what we saw in the middle of last year. Obviously, we saw a massive amount of bearish price action, in fact, very close to the same amount of bearish price action in terms of the percentage loss as what we've seen over the past few months. But if you're looking at the bottoming out phase in the middle of last year, we still saw a decent amount of bearish price action, and in fact, we continued to put in a slightly lower low if you're looking at these candle wicks and also if you're looking at the candle closes. But at the same time, while the price action was looking very bearish, the daily RSI on the other hand was holding up quite well. We were actually at these much higher levels, which was forming these bullish divergences. Now, I want to make it clear that this is not confirmed or anything like that. This is just talking about a possible scenario to pay attention to moving forward. But right now, in the 4-day parabolic stop and reverse indicator on the Bitcoin chart, we have just placed our first red dot again. So what does that mean for Bitcoin? Well, first of all, placing red dots on this time frame in this indicator, historically speaking, is a bearish signal. And it also means that the recent bullish reversal signal that I've been talking about for the last couple of weeks on the channel has now technically been invalidated, making this the first false bullish signal on this indicator on this time frame ever since the end of 2019. So this was quite a rare occurrence that we don't actually see too often on this time frame. So it will definitely be interesting to see how this plays out now that we're technically in the red on this indicator. And I'll quickly bring up this chart again for anyone that missed it. And this right here is the weekly time frame for Bitcoin, showing the 1,000-day simple moving average. And what this moving average shows us is basically the worst case scenario for Bitcoin. If we do play out all of the bearish scenarios, then a drop down towards this moving average could be possible. But buying Bitcoin below the 1,000-day moving average usually is a generational buying opportunity, as in we only see the opportunity of the Bitcoin price below this moving average at the end of a major bear market or in a black swan event like March 2020, for example, when the entire stock market was crashing. And right now, this moving average is coming in at around 25 to 26,000 US dollars per Bitcoin. So once again, in the worst case scenario, if we could pick up Bitcoin below around 26 to 25,000, then historically speaking, looking at the bottoms of bear markets and March 2020, that would be a generational buying opportunity for long-term holders. But I want to make it clear that just because that might be a worst case scenario, it doesn't mean that is definitely going to happen. And for anyone out there that is panicking at the Bitcoin price, just know that today's Bitcoin price does not change Bitcoin's super long-term future, talking about 5, 10, 15, 20 years from now. What does have an impact on Bitcoin's long-term future are Bitcoin's fundamentals, such as the Bitcoin hash rate, which by the way is right now sitting very close to all-time highs. And if you are invested into Bitcoin, you should know what this means. But for those of you that might be new to the channel, the Bitcoin hash rate shows us the approximate computing power of the Bitcoin network. And so the higher the hash rate, the more computing power the miners have collectively. And therefore, the higher the hash rate, the more secure Bitcoin is. And once again, for the beginners out there that might be panicking at the Bitcoin price action, the Bitcoin network and the Bitcoin price are actually two completely different things. For example, let's just say if the Bitcoin price went to zero, the Bitcoin network would still be there. But if the Bitcoin network went to zero, so basically if all of the Bitcoin miners just stopped mining Bitcoin, then Bitcoin as a whole would essentially cease to exist. And so because of that, the Bitcoin network, for example, the hash rate is actually far more important than the Bitcoin price today if you are a long-term investor. Another important Bitcoin fundamental which shows incredible growth in new Bitcoin technology is the amount of nodes connected to the Bitcoin Lightning Network. For any of the beginners out there, the Lightning Network is a second layer solution built on top of Bitcoin so that we can execute extremely fast and extremely cheap transactions still using the Bitcoin cryptocurrency, but it's just happening on a separate network from the Bitcoin blockchain. But then all the transactions on the Lightning Network get synced up to the Bitcoin blockchain in the end. And if you're wondering what a node is, in most cases, it's just a device on the network. So basically, this chart right here shows us a massive increase in adoption for new Bitcoin technology. And obviously, as more and more Bitcoin gets mined, we are approaching closer and closer to the next Bitcoin halving, which is only about 800 days from now. And I say only 800 days, but believe me, it comes around sooner than you think. And for any of you Bitcoin holders out there that do not know about the Bitcoin halving, I definitely recommend researching. So fundamentally speaking, nothing significant has changed about Bitcoin. In fact, if anything, it's gotten even stronger in recent months. Because remember, the Bitcoin network is completely separate from the Bitcoin price. Anyway, getting into the Ethereum part of this video, this is the Ethereum to US dollar chart on the 4-hour time frame. And obviously, you can see here that this previous bullish divergence that I let you know about around 3 days ago now, has already played out with a somewhat similar outcome to what we saw around a week ago. And I mentioned yesterday, if the short-term Ethereum RSI stays in an uptrend, then technically speaking, that is more of a bullish thing on the price until, of course, the moment we break that uptrend. And then that is obviously a bearish signal. Anytime we break an uptrend, that is clearly a bearish signal. And if you're looking at the exact moment we saw that happen, that was right around here, just before we actually saw that dump in the price of Ethereum. And the same thing goes for this Ethereum chart as what I said in the beginning of this video about Bitcoin potentially forming a new bullish divergence, because obviously we've seen lower lows in the price action and we are potentially still seeing higher lows in the RSI if you're looking at these two lows right here. And now giving you one last update on this Ethereum fractal. Basically, it played out pretty much perfectly the whole way up until the very end, because at the very end of this fractal, we were expecting a move up towards around 2,800 is where I said it yesterday. And instead, Ethereum only made it up towards around 2,750, which I did mention yesterday. We had some short-term resistance at that level anyway. So apart from the fact that we missed out on that last $50, this fractal actually played out very well. Now looking at the 12-hour Ethereum chart, and that bullish signal in the parabolic stopper inverse indicator that I mentioned yesterday did end up turning into a false signal. And this was a possibility that I did discuss yesterday, because we saw something very similar to that right around here just a few weeks ago. And so because I was talking about this possibly happening yesterday, I said that this parabolic stopper inverse indicator on the 12-hour chart flipping bullish again isn't really enough confirmation, because on top of that, we ideally need to see an uptrend in both the RSI and the MACD, which we are not seeing here on the 12-hour time frame, at least just yet. So technically speaking, especially if you're talking about the price oscillators on the 12-hour chart, we are still trending bearish, as I have been saying for around a week now. But looking at some important levels on the Ethereum daily time frame, first of all, we had this previous range of support, which is now technically acting as resistance, and that is coming in between around 2,900 and 2,650. And once again, if you've been on the channel for the last week or so, I have been letting you know for around a week that if Ethereum breaks below this 2,650 level, then it's very likely we could drop down to this range of support at around 2.3k to 2.4k. And that's exactly what Ethereum did. And so far, we have found support in that price range as expected. If you're wanting to know some important levels of support below 2.3k, when you're looking in the trend-based Fibonacci levels, we've got the golden pocket coming in at just underneath 2,000 US dollars. And then we've got the 78.6% Fibonacci level coming in at around 1,700, which is where we did find a lot of supports back in May, June, and July. And everything that I said earlier about the Bitcoin daily RSI also applies right now to the Ethereum daily RSI. Relatively speaking, we are holding up quite well. So even if we do form a slightly lower low and perhaps come back down towards these golden pockets, then that opens up the possibility of forming a daily bullish divergence because of how high this RSI is sitting compared to this previous low. And if we do not go below the previous low, which is sitting at around 2.2k, then in that case, the price action and the RSI would not be diverging, but we would have a higher low on the daily time frame, which is technically a bullish signal. So basically, all of this only starts to flip much more bearish again if we start breaking below the May, June, and July lows at around 1,700. And when you're looking at the 4-day parabolic stop and reverse indicator for Ethereum, unlike Bitcoin, this is still sitting in the green for Ethereum, which is very interesting because this indicator has actually been more accurate for Ethereum than it has with Bitcoin throughout Ethereum's entire price history versus Bitcoin's entire price history. So it will definitely be interesting to see how this plays out, especially as Bitcoin formed a red dot here. But to be completely honest, most of the time Bitcoin and Ethereum do the same sort of thing. So if Bitcoin has flipped this indicator back into the red on this time frame, then technically speaking, that should increase the chance of this indicator for Ethereum flipping back into the red. And there is still this important Ethereum fractal on the much larger time frames to pay attention to. We have seen this fractal 2 other times in Ethereum's entire price history, and both outcomes from these previous fractals were bearish. So if we break below this upward trending line of support on the larger time frames coming in at around 2.2k, if you're going from the bottom of these wicks, then clearly a scenario like that would be a bearish signal for Ethereum moving forward. Now taking a look at what is happening in the stock market right now, this is important for all investors out there, because usually if we see a lot of bearish price action in the stock market, that also results in bearish price action in crypto, like what we have been seeing over the past few months or so. And in case you haven't heard about the recent news between Russia and Ukraine, honestly, I was expecting much more red to show up in the stock market today. But if you're looking at the S&P 500 index, even though we opened below where we closed yesterday, it is still rather surprising to see a green candle here, at least at the time of recording this video. And by the way, if you have not heard about the recent news between Russia and Ukraine, make sure you follow me over on my Twitter for extra updates throughout the day in real time. And the link to my Twitter is in the description down down below and also in the pinned comment. Now, obviously, what we have to talk about is the fact that the S&P 500 index is below some important levels. So clearly, this is not a good sign while we're below those levels and could possibly result in some more bearish price action, or will it? Because if you're looking in the daily RSI for the S&P 500 index, right now, we are technically forming a higher low in the daily RSI. Now, I want to make it clear that this next low is actually not confirmed right now, and it won't really be confirmed until at least next week anyway. But if it does end up confirming, so basically if we confirm a bounce in the daily RSI and see at least 1 to 2 daily candle closes after that bounce, then in that case, what we have here is technically a bullish divergence that is forming right now. And if you want an example of a previous bullish divergence, the most recent bullish divergence on the daily time frame in the S&P 500 index was at the end of the September correction. We saw a lot of bearish price action, and we did end up forming lower lows in the price action, but the RSI formed higher lows. And obviously, you can see the outcome from that bullish divergence. But I also want to make it clear that right now, there's a lot of other things happening that weren't necessarily happening back in September. So just keep that in mind. And when you're looking at the NASDAQ 100 index, it's basically the same story. We've got the same possible bullish divergence forming. And even though today's market opened well below yesterday's daily candle close, we're currently seeing a lot of green price action in today's trading day, which, as I said, with the S&P 500 index, I find this very surprising considering the recent news, and especially considering the fact that the DXY, the US dollar currency index, has seen a pump just recently. And for the complete beginners out there, if the US dollar currency index is going to the upside, then obviously that is bullish for the US dollar, but technically bearish for anything that is paired against the US dollar, such as Bitcoin versus the US dollar, for example. And then when the US dollar currency index is going to the downside, it's the exact opposite. Technically, that is bullish for things like Bitcoin. And as of right now, despite seeing a short-term bullish move in the US dollar currency index, we are still fighting against this horizontal line of resistance coming in at around 97.5. And one of the big reasons why the US dollar is gaining in value is due to foreign currencies such as the Russian ruble crashing against the US dollar, which, by the way, this is the weekly time frame for the Russian ruble. So in less than 1 week, Russia's national currency has lost 13% of its value against the US dollar. That is starting to approach the volatility that we see in the stock market, and even starting to approach the volatility that we see in Bitcoin. But remember, this is a fiat currency meant to be designed to stay stable. But if you're zooming much further out on the monthly time frame, looking at everything since the late 1990s, this recent drop in the Russian ruble is certainly not unique to the Russian ruble. In fact, this long-term chart is quite literally a fiat currency trending towards zero, which is possibly one reason why just a few weeks ago, the Russian central bank and the Russian government want to regulate Bitcoin as an official currency. But anyway, if you made it this far in the video, please make sure to leave a like down below. And if you're new to the channel, you might as well subscribe with notifications turned on for more updates just like this every single day. And because I included Bitcoin, Ethereum, and the stock market in this video, I'm only going to be uploading the one video for today, because with what's going on in the world right now, today's just one of those days that we should all just take a moment away from the screens and realize how lucky we are that all we have to worry about is what's happening in the price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.